Welcome to the 82nd episode of Kanga Crypto News, your weekly dispatch for concise, credible updates from the crypto space. I'm Kuba, here to deliver the latest developments and the stories that matter the most. A quick note before we begin, everything you hear on Kanga Crypto News is researched and compiled by expert Kanga analysts using trustworthy sources only. However, this is not an investment advice. New episodes land every Friday. To stay on top of the most important moves in crypto, hit the subscribe button and tap the notification bell so you never miss an important update. And now let's get started. As always, strategy, because Saylor's strategy remains consistent. The firm scooped up another 487 BTC for roughly $50 million at an average price of 102.5k each. Yes, continuing to buy above 100k, reinforcing its long-term conviction. That brings its war chest to 641,692 BTC worth $47.5 billion. Year to date, a neat 26.1%. Strategy's operation continued to generate returns, 2.8 billion in Q3 alone thanks to Bitcoin's run. Saylor thesis is unchanged, fiat melts, Bitcoin doesn't. This is corporate balance sheet evaluation on steroids, and he's still accumulating like the cycle never ends. Now over to BitMine, the Ethereum maxi in the Bitcoin miner's body. It added another 110k Ethereum this week and now owns 3.5 million Ethereum, 2.9% of the entire supply, worth $13.2 billion. The goal? The alchemy of 5%. Chairman Tom Lee calls Ethereum a super cycle story with Wall Street tokenization as the macro fuel. ARK founder fund and others are backing him. At this pace, BitMine is halfway to owning a slice of the Ethereum's network itself. Brazil, meanwhile, went full regulator. Its central bank rolled out AML/CTF rules that turn every crypto fiat transfer into a foreign exchange event. Exchanges must report identities, track wallet flows, and hold up to 37 million Brazilian reals in capital. Critics call it total surveillance and see it as a setup for the digital real. Ironically, Brazil intended PIX by copying crypto efficiency, and now it's clamping down on the tech that inspired it. Then came XRP's moment. The DTCC quietly listed 5 spot XRP ETFs from Bitwise, Franklin Templeton, 21 shares, Canary, and CoinShares in its active and pre-launch register. The same step that preceded BTC and Ethereum ETFs. It's not SEC approval yet, but it's the on-ramp to institutional access. XRP popped 6%, breaking $2.35. If any of these funds launch, liquidity and Wall Street flows could significantly impact XRP's market dynamics. On the DeFi side, VanEck just tied its tokenized Treasury fund into Aave's Horizon market. Institutions can now use US Treasury-backed tokens as collateral, loop borrows to juice yield, and do it with Chainlink's price feed and securitized compliance rails. It's real-world assets meeting DeFi, a bridge that's finally getting traffic. Risk remains, but if yields stay positive, V-Bill could become the blue-chip collateral of on-chain finance. Speaking of crossovers, Bitwise is gunning for the first Spot Dogecoin ETF. The 8A filing starts a 20-day countdown unless the SEC objects. Grayscale and Osprey are right behind, but Bitwise wants to own the meme ETF narrative. Doge is trading near $0.65, testing resistance around 0.17. Break above which some technical analysts suggest could signal further momentum. ETF approval could be a key factor. Ripple is on a roll. It's just raised $500 million at a $40 billion valuation led by Fortress and Citadel. Payments volume topped $95 billion. Its RLUSD stablecoin hit $1 billion market cap and it's buying everything from custody to treasury firms. With 6 acquisitions in 2 years and licenses in 75 jurisdictions, Ripple's evolving from payment rails to financial infrastructure powerhouse. Over to Cathie Wood, who dialed down her Bitcoin dream from $1.5 million to $1.2 million by 2030. Her reason? Stablecoins. USDT and the USDC are eating into BTC's real-world use cases in emerging markets. Still, she sees Bitcoin holding the digital gold role while stablecoins run payments. Trump's Genius Act cemented US stablecoin rules, so the two assets might split the monetary future. BTC stores value, stablecoins move it. Coinbase got dinged €21.5 million by the Irish central bank after a coding bug missed monitoring some transactions worth €176 billion. They fixed it fast and rescreened 97 million transactions, flagging 185,000 for review. Regulators called it a serious AML failure, but Coinbase is leaning into compliance harder than ever to prove it's grown past its early tech missteps. And finally, Ripple again, this time with Mastercard, Gemini, and WebBank. They're testing Ripple's RLUSD for settling card payments on the XRP Ledger. Think Visa rails, but on-chain. Instant, cheap, and auditable. It's a blueprint for stablecoin-powered finance, with Mastercard bringing 3.5 billion cardholders to the table. If this pilot sticks, stablecoin settlement could quietly rewire the back-end of global payments, crypto finally running behind the scenes of everyday money. Overall, it was a week of corporates doubling down on crypto. Saylor buying, BitMine accumulating, Ripple expanding, and institutions finally touching DeFi and meme coins. Governments tightened control, but Wall Street and Silicon Valley kept building. Short term, mixed sentiment. Long term, the rails of traditional finance and crypto are merging faster than ever. That's today's Kanga Crypto News. If you enjoyed this episode, please like, share, and subscribe to stay current with the latest news. As always, stay informed and stay ahead in the blockchain world. See you next time.
We are Kanga, beyond crypto.